Hello, my name is Mentor Chris with the ICT Dojo, and today I'll be showing you how I got funded through multiple futures prop firms using this simple time-based liquidity model. The Silver Bullet model was first featured in the 2023 mentorship by ICT. It has gained in popularity over the past 2 years due to its simplicity yet profitability. ICT says himself, the Silver Bullet is simply a run to a fair value gap towards a liquidity pool. Now, there are other things to it, but I'm telling you from experience, it's one of the simplest models to learn, but can still let you achieve financial freedom that you're looking for. First, we will be going over our model tree. The Silver Bullet is simply based off of a bias, and we will use a fair value gap in order to execute to target our draw on liquidity. So on the left, we have bias. First, we will see what liquidity pools have we swept and what resting liquidity pools still remain. We will also use delivery, which is SIBI's and BISI's respect, and seeing how we react off of those levels. And we will target liquidity or inefficiencies. Heading out to the right, we have our execution, which is simply a market structure shift with displacement. And then we have a fair value gap, which is our entry, and we use a 1 to 5 minute fair value gap, also targeting our drawn liquidity. Next, I'll be covering our visual model and how this actually looks on a chart. First of all, we have our bias, where we sweep liquidity, we trade into a 1 minute fair value gap, which is our delivery. So now that we swept sell side, all we have left is buy side. So looking at our resting liquidity pools up here, this leads up to our final target. Now this is our bias we have created. Next, going into the execution, we have a market structure shift. This market structure shift creates a Silver Bullet fair value gap. We take our entry and we target our final drawn liquidity. Now I'll be showing you what times we actually execute on the Silver Bullet. So on the left, we have our 950 to 1010 macro. We create a fair value gap. We could use this as our entry to target buy side. Say we miss this, maybe we didn't have all the right confluences, we weren't sure. Okay, well, we still have a whole other hour and the next macro to enter. So next we have another trade opportunity where we have a market structure shift. We already took out buy side and we're going to target sell side targets, which is these lows. And typically ICT teaches the Silver Bullet from 10 to 11. However, I'll show you in other examples where you're going to miss a lot of trades if you're not taking that extra 10 minutes to find an entry. So 950 to 1010, we're going to have our Judas swing or spooling macro. And typically price will displace during this time. Just those extra 10 minutes are going to give you a lot more entries. And trust me, they're going to be high probability. Same as 1050 to 1110. As you could see, we have a huge continuation move right here. So typically you're going to see lots of liquidity taken at this time. And if we enter at that time, or if we enter a little bit before, we're going to get a high probability trade. News is just going to be as important as our timing. So I trade NQ, ES, and YM, which is the US market. So my actual settings for Forex Factory is going to be USD only, and then I'm going to focus on red folder. Say you're trading the Euro USD or GBP, then you're going to want to put Euro and USD as our settings. So the main thing I want you to take away from this is we are only entering after the news release. And typically we have news releases at 10 and 8:30. And what this means is if we're entering after these news events, we're going to get a lot of volatility. We're going to see liquidity swept and we're going to have a clear bias. And we're only going to get the cleanest setups on red folder days. So that's why we want to focus on them. And it's not about more, it's about less and taking good high quality trades. Next, I'm going to be covering our stop placement and risk management. Now, this is going to depend on what kind of silver bullet we're taking. So if we're taking a silver bullet trade where we sweep liquidity, creating a new swing low, we're going to use that new swing low to protect our stop. Now, if we're trading a continuation silver bullet, like this one right here, so this was our first leg. If we're trading the second or third leg, we're going to be using the candle open of the actual fair value gap. Now, in terms of risk management, we're going to be risking about 0.5% per trade. So this would be $500 on 100K. And for the example one, this would be $500 risk for 1,000 reward, and then $500 risk for $1,500 reward. And the reason why we do this is we are going to be taking a little bit more trades because this is a scalping intraday method. We're going to be a little bit more active in the market. Therefore, if we're more active, we're putting on more risk overall. So we have to lower our risk on our end. And the way we're going to make up for it is these trades, they get a lot of RR. So in the long run, you're making just as much as any other strategy that's risking 1%. Now we'll be looking at a live trading chart and how a silver bullet actually looks like. So first of all, we're going to go over our bias. So on the left side, we could see we took out London over here, and then we took out Asia session right at the open. So we're going to consider that. If we took buy side, then we might target sell side. So looking right here at this 830 candle, that's our news candle. So price typically tracks to news liquidity like that, long wicks. And then hopping on the higher time frame, we're gonna look, are we delivering bearishly? So right here, we have a hourly fair value gap. So I'm gonna draw that out. And then going down to our lower time frame, what kind of confirmations do we have? So coming off of our sweep, we have a market structure shift as our first confirmation. We're also ignoring this BISI, and we're not at our proper time yet. We're still waiting for 950, so we're gonna let that play out. Okay, so right here it's gonna be 950. So we have this fair value gap form. And typically, if we're trading off continuation, we're going to want to put it right above the fair value gap. However, that would be way too small of a stop. So I'm going to move it up here. And our first target will be this liquidity. So that would be our first target. Now we might want a partial depending on your risk management. This would be our next target. And then we have this final target down here. So just kind of going over what happened again. So we took out this buy side. We had this Judas swing right here at 930 open, which is just a sweep basically. Our market structure shift into our fair value gap down here. If you guys have gotten this far, you now know the silver bullet model and you're on your way to profitability. If you want to check out this slide, it will be in the VIP chat in the Discord, which will be in the link if you want to check that out. Thank you.